Upstart is roughly down 20% for the month of February. However, you can't ignore that price is hovering around this macro W pattern in which one says to go long at the apex. Now, scrolling down to the weekly chart, I want to bring to your attention this rally base rally formation, which is the basis of this weekly buyer's level. We'll say at $25. Now, looking at current pricing going up, you can see a bunch of rejection wicks near that $36 level. And so that becomes a first target. Now, on the weekly chart, you can see that there's nothing in the way of price moving higher based on this extended range red candle. Now, before we continue with the analysis, let's actually look at why the stock was down 20% in February. So Upstart operates a credit valuation platform driven by AI. It boasts that it can identify more borrowers for lenders without increasing risk, and creditors were taken with this idea before interest rates went through the roof. However, the platform may not work well under current circumstances, and Upstart's business has been feeling the pain. So it appears that it's not really a good business model in a high interest rate environment, as their basis of their business model deals with lending and borrowing. All right, so it has been on a down spiral for more than a year, and it didn't get any relief in 2023 fourth quarter. Revenue declined 4% year over year. Its sixth straight quarter for declines. Transaction volume was down 19%. Net loss was $42 million, an improvement from the $55 million a year ago. So again, six straight quarters of declines makes sense as Fed Powell started raising rates, I think back in 2021. Nevertheless, on the bright side, management is guiding for 2024 first quarter revenue of $125 million, or a 21% increase from last year. However, it's still expecting a $75 million loss. Upstart's long-term premise still looks compelling. Looking out 10 years from now, it might be an amazing position. However, demonstrated its value and relevance over a sustained period of time. But there's no reason to rush in the stock right now, even if the Fed cuts rates this month as expected. It will take time to filter down to Upstart, and even longer for Upstart to reflect any progress. Thus, the article is stating just take a wait and see approach. Now, I would agree with that. However, if you do, depending on your time horizon, you can dollar cost average now, or you can get long now. Again, I think the bottoms were in at $12, and this W pattern is a great opportunity when price pulls back to go long, as we did have here back in November of 2023. Price has come back and it's giving you another opportunity to get long. Going to the daily chart, and you can see there's the moving averages are somewhat mixed, indicating that price has been range bound for the last 6 months or so, and at the moment price is below that key 200-day moving average. The unfortunate part is that you do have a def cross. That's where the 50-day crosses over and under the 200-day, so that's very bearish. However, if you look at the price structure on the daily chart, you can see how price did form that W, right, double bottom. But I don't see volume kicking in anywhere here like we did have back in December. So I need to see price pump on volume, pull back, and then move higher, because you do have a gap that needs to be filled near that $33 level. But I agree with the article for now. It is a wait and see approach until you see confirmation that price wants to go higher. Thanks for watching. Subscribe. Please like the video.